From the University of Westminster, this is the Week Ahead with Dave Coker.
Guys, welcome. It's Sunday, February 14th. This is, of course, the Week Ahead, and my name is Dave Coker. Let's start in and see what's going on for the next 5 trading days. So key events you got to be aware of. Mr. Biden's still pushing his $1.9 trillion. They seem to be making some progress there in terms of the spending. There's a lot of back and forth about eligibility for individual taxpayers who are going to be receiving money. So we'll see how this all plays out. Once again, the longer it drags on, the worse off people in the states will be who don't have incomes, don't have jobs, don't have government support. So it's really important that they conclude this very quickly, one way or another. Next up, we see Q4. Oh, there we go. My animation, horrible. Sorry about this. Next up, we see U.S. Q4 earnings still progressing. We've got a lot of companies reporting, and particularly in travel and leisure this week. So watch those because those sectors have been decimated. And I'm the type of investor that I like to buy things when there's been issues with price systemically across the board. It's very attractive in that regard. So keep an eye on this and you might find some bargains. Of course, these would be long-term holds. You're not going to be able to buy them and just sell them, flip them in a short period of time. You're going to have to be prepared to hold on for a while, but it's good stuff. All right, economic data, we'll be talking about that when we get into the daily detail. Some real important numbers coming out. Oh, and speaking of important numbers, Bitcoin. Sitting here Sunday, it's flirting with $50,000, trading solidly above 49,000. Some of the TA guys suggest if it punches through 50, the next resistance point is 53,000. Here's hoping. And finally, we got GameStop on Capitol Hill. My gosh, this is going to be really interesting. So they've got some of the major actors in this little event that we saw. So they got people from Reddit, they got people from Citadel, a few other firms, and then they've got the instigator. I'm not going to say his name, but he's going to be going to testify on Capitol Hill. I think he's going to show up. I'm not totally sure. All right, overall, where are we? So this is February 2021. We're looking at the S&P 500 year to date. Now, guys, go to the wonderful site Finviz. You can see exactly how this is all set up. It ranges from minus 30% bright red to plus 30% bright green. And we can see when we take a look at year-to-date data, even though the stock markets closed at record highs, both the S&P 500 and the NASDAQ on Friday, we can see it's been a rough session overall. And it's really wild to actually go in here and look at this stuff in a little bit more detail. For instance, when you take a look at Microsoft, seems to be doing pretty well, right? Up some 10%. And that's not too shabby. But then you take a look at Amazon. Amazon, yeah, for all the talk about it, is just sort of going sideways, not really doing a great deal. That's very fascinating. And when you take a look at the performance, even though we've closed at record highs, take a look in the lower left-hand corner down in financials. And you'll notice Visa's down some 4%. MasterCard's down almost 5%. PayPal bouncing up. We'll talk a little bit later about that, but of course it's up 27%, likely because they announced they're moving into cryptocurrencies in particular, in general, and Bitcoin specifically very heavily. And look over here in consumer defensive stocks. So right-hand side, second panel down. And you can see we've got these companies that in theory, even in a recession, should be doing fairly well because people got to eat. But look at Procter & Gamble, for instance, down some 8.28%. We can see Coca-Cola and Pepsi. I'm really surprised to see that. Their sales are falling as well. Really wild. So even though we're at record highs, guys, it doesn't mean that all stocks are at record highs. It's just the way the market works. All right. In terms of some of the things we're going to talk about before we get into the detail, yeah, the money's coming, guys. It's particularly interesting. So Yellen wants to spend. She wants to get the entire G7 to spend. And that way, when they debase the US dollar, everybody else's currency will go down as well, right? So there's a method to their madness, sort of, I think. Not totally sure about that. But in any case, we'll see how it goes with Yellen and the G7 and if she can force anybody else to spend money. Concerns are this. If you take a look at, and this is the US, this is off CBO, Congressional Budget Office data. If you take a look at the debt that's held by the public as a percentage of gross domestic product, take a look on the left-hand side. We got World War I, Great Depression. World War II was the big one until we rolled into the Great Recession, global financial crisis as I call it, and now the pandemic. And guys, everything to the right of the projected line is forecast. Here's the thing that you've got to be aware of with the states. the economy is really, really huge, and the legislative structures are set up that they just can't. Even if Mr. Biden wanted to stop the spending today, it's exceedingly difficult to stop it. In other words, they pass these budgets, and a lot of the spending gets locked in until the next budget comes out, perhaps 4 years later. So CBO is forecasting at the present rate, by 2050, we're going to be at 200% of gross domestic product. It's a big deal. Now, we won't dwell on that too much. All I'll say is just make sure you got gold, silver, property. I like that. And Bitcoin, as I mentioned several times. I used to say Bitcoin for fun, but Bitcoin's getting serious these days. Now, Bernard Baruch was an interesting character because we always got the stock market to dump our money into. And he was a banker and made his fortune after the Great Depression. His is a wonderful quote, I'm telling you, because I'm so annoyed when I'm on social media, and there's always these idiots, and I'm always polite, I never say anything, but there's always these idiots that consistently make profits. They never make a loss. And Baruch's quote is particularly apropos. Nobody makes money consistently in the market. I took a big hit with the Corona crash, as I call it, 6 figures, a little bit over 100,000. Still, you don't get too worried about it. It's only money. So anybody that looks at you and tries to convince you that they never lose money from the market, likely are they're not in the market, or perhaps they're just making stuff up, which is I've noticed that a great deal. Still, stocks are a good place to put your money. I think they're good long-term investments. The key phrase there is long-term. And you got to be sure about this. Here's an interesting one. There's a couple of variations of this going around. I first saw it with Goldman about a week ago, and now Bloomberg's come out with their own, and they're mirroring, they're exact images if you were to look at them. This is the non-profitable tech companies index. My gosh, look at this. It's absolutely incredible. So this rates the performance of share prices of tech companies that aren't making any money, which unfortunately is a lot of them. And you can see it's a big problem, big bubble. Some people are actually using that word now. We know that people like stocks. And overall, you can see that we take a look at the world stock market cap, total stock market capitalization, and it's hitting record highs. And again, guys, what goes up must come down at some point. We're not totally sure when this party is going to end. We know it's driven by a lot of liquidity that the Fed and other central banks have pushed into the system. But people are worried about this. And here we got Google search trends. It's always wonderful to go look at this and see exactly what's on people's minds. And stock market bubble, people want to know. Yeah, it's a big concern at this point. We're not totally sure if we really are in a bubble. Of course, it's very difficult to realize you're in a bubble. Just, I know things look a little weird. I still buy stocks, but remember, guys, my orientation is towards dividend-paying stocks only. So I don't buy these vanity stocks, and I certainly don't sell. I buy and just hold on for incredibly long periods of time, although that's not strictly true. Last Friday night, I sold some stocks, a part of a position I've held for about 18 years, I believe it was, and it had gotten a little bit it had progressed really well, and it was starting to dominate my portfolio, like 43%. It was really huge. So I sold a portion of it, and used that to buy shares in 2 other dividend-paying companies. And by doing so, I increased the cash flow in my portfolio. So that was really positive. But yeah, I had to sort of tamper down on that a little bit. It's a little weird. Still, we have Bitcoin, guys. And I thought I'd put this out. This is really cool. If you read my blog, you'll know that I've talked about MicroStrategy when they announced they were moving some of their funds into Bitcoin. They're not investing, guys. We'll talk about that in a second. But look at the share performance of MicroStrategy compared to Bitcoin since they made that announcement. Oh yeah, and MicroStrategy is not investing in Bitcoin. My theory at the time, if you read my musings on my blog, were absolutely correct. They're buying Bitcoin, they're holding Bitcoin, or they probably have a custody operation that's holding it. But the point is, they're going to use Bitcoin to make payments to suppliers. They're going to accept payments in Bitcoin. And basically what they're doing there is they're disintermediating banks. Because remember, they did this stuff through banks before. Banks made the payments. Goodbye. You're charging us too much. And it'll be really cool to see what the reaction is. Of course, Tesla's announced the same thing. And let's see where it goes with this, okay? All right, let's get into the daily stuff. First of all, U.S. markets are closed. It's President's Day. If you're American and if you're in the States, enjoy your President's Day. I will tell the rest of the world what that really means. We're going shopping. Yeah, that's what Americans tend to do when we get to President's Day. But it's okay. It's all good stuff. All right, Tuesday, February 16th. My animation again. There we go. All right, at 08:30 hours, we got the New York Empire State Manufacturing Index. And what we're doing is we're looking at New York State. We're looking at manufacturing activity in New York State. And this is a really simple metric. And this is why I love these simple metrics. I'm not that bright, right? So a level above zero means that things are improving. Level below zero means it's contracting. And we saw that in the depths of the Corona crash. It's not really booming. It's been as high as 35, I believe, over the past year. But it's a step in the right direction if it comes in at the forecast 6.5. It's really good stuff if that happens. We got 3 and 6 month T-bill auctions. And I put the chart down here at the bottom. That's a 5-year chart. We're looking at the 3 month and 6 month. We're looking at the yields. And you can see this is really wild, guys. Oh, that should be prior for both. I'm so sorry. So prior for the 3 month was 0.35 or 3.5 basis points. And for the 6 month, it's 0.50 or 5 basis points. As I said before, you're getting return-free risk. At 1500 hours, FOMC member Daly is speaking. And guys, pay attention to that. Then you won't be wondering what the Fed's talking about when they go in to discuss if they're going to hold rates the same, cut them, and those two options are more likely than the alternative, raise rates, although it could happen. We'll have to see. All right, at 08:30 hours, we got retail, on Wednesday, February 17th, at 08:30 hours, we got retail sales month to month for January. Once again, guys, U.S. economy driven by consumption, retail sales, very important component. And in fact, some people consider this the single most important component of consumer spending. Now, a higher than expected activity is positive. Clearly, a lower than expected activity is negative. Prior came in at 0.7%. We're forecast to come in at roughly 1%. And if we miss, there's going to be a problem. So if it comes in, heaven forbid it should contract again. But if we see a miss, there's going to be some issues there. And conversely, if we tend to blow away the forecast 1%, we'll do pretty well there. All right, at 0915, 0915, we have industrial production year on year for the month of January. Prior came in at 3.58. We don't have a forecast. Now remember, this measures the value, the change in value of U.S. production, factories, mines, utilities. So we pay attention to this. It's extremely important that we get a read on it. And at 1400 hours, we got the FOMC meeting minutes. They're being released 6 weeks after the decision was taken. On Thursday, February 18th, at 1100 hours, FOMC member Brainerd is speaking. And as I always recommend, guys, get the transcript, watch it live, whatever you do, make sure you come up to speed with what this voting member of the FOMC is saying publicly, because it more than likely is what they're saying privately. At 08:30 hours, we got building permits for January. Prior was 1.7 million roughly. Forecast to come in, a little bit of a contraction, 1.68 million. And once again, guys, this is important because building doesn't start until the permit's been issued. And once the permit's been issued, then they can start to go shovel in the ground. They can plan that out. And that, of course, is extremely important because not only does it stimulate the economy to be building properties, but also once the properties change hands, once the new owners move in, there's a secondary effect. And namely, they wish to decorate it. So they want to buy white goods, as we call it in the UK, refrigerator, freezer, stuff for the kitchen, beds, things like that. And also they might bring decorators in to do things to the interior, the walls, change the walls, or just make it their own. So it's extremely important to watch. And at 1300 hours, we got 30-year TIPS auction. Now, these are wonderful securities. TIPS is an acronym, stands for Treasury Inflation Protected Securities. And what they do, guys, is they pay off in real terms. So remember, when you look at 30-year bonds, for instance, when you look at the auction rate, that's nominal. And nominal means stated. It's not adjusted for inflation. And check this out. You can see the prior rate on offer was negative 0.272%. In other words, negative return. Wild stuff, right? Yeah, really, really, really wild. We don't have any data on how it might turn out, so pay attention to it on the day or shortly after. Friday, February 19th, At 09:45 hours, we got manufacturing PMI. And when we take a look at manufacturing PMI, what we're doing is we're looking at it's the purchasing managers index. And what we're trying to do is we're trying to understand, are they going to increase orders or keep orders the same or decrease orders? And again, this is a good anecdotal indicator of upcoming economic activity. If they're placing more orders, the number will be above 50. And then we'll see some increased economic activity down the road, which will translate into good stuff for the stock market and other asset classes. Forecast prior was 59.2, forecast slight contraction, 58.5. And services PMI, same thing, but in the service sector. And prior was 58.3, forecast come in at 57.5. Of course, the service sector is extremely important in the United States. And this is one that I like to look at. It's published by Market, and they survey over 400 CEOs of service-oriented companies. So a wide range of possible companies. And when we see this, when we take a look at this, we can get an idea of what is going to happen, likely in the future. We're not totally sure. All right, guys, that's been it for the week ahead. Once again, I'm wishing you a safe and happy and profitable week. You can make money in the markets. I do recommend against trading, just invest. Buy yourself some dividend-paying stocks, sit back, get some popcorn, watch all the fun. There's a lot of fun coming up. Remember, we think the markets are going to be correcting sharply sometime over the next 6 months. If you're getting paid dividends, you don't care. In fact, you enjoy the drama. All right, take care, guys.